Hello everyone, we are here to discuss about gold today. But before we start, I would just like to request you to press the bell icon and to subscribe to our channel to receive more updates on commodities and currencies. Basically, what we have seen recently is gold, which we have given a 6 to 7% correction after touching its all-time high in the first week of the current month. We have seen 2080 levels on COMEX, and that from that levels the gold has corrected by almost about 6 to 7%. Now, what are the short-term triggers? What we have seen recently is like the rising rents in the US, the consumer credit rising, showing a growth of about 15 to 20%, and also is showing giving the support to the dollar index, where dollar bulls are gaining momentum recently. We have seen levels about 103 in the dollar index, and what we expect dollar index to further gain momentum in the short term perspective of around 104 to 106 levels. So that is what is weighing on the sentiments for gold right now. Along with that, as shown in the chart also in the screen, we have seen that the inflation has been on a downward spiral, but the core prices, the pace of decline in the core CPI has been slow. And that is what is leading to concerns of a sticky inflation in the short-term perspective. Also, we are seeing that because of that, we have the dollar index is having support, and also we are witnessing a very volatile situation in the short term, where concerns of pause in the rate hikes are also building up. So because of that, we are expecting some volatility in the gold prices, where gold prices still has some more room to fall in the short term perspective to around 1940 to 1920 levels on the COMEX. So we are expecting a trading range of around 1940 on the lower side, and on the higher side 2070 to 2080 on the higher side. That is what the short term trading range. Now coming to the long term perspectives. So what are the long term perspectives on gold? As shown in the chart also, like what we have seen is like on a longer term perspective, gold is expected to outperform other commodities like copper. Basically, with the headwinds in the economy and declining inflation also, and rising interest rates are now at a peak level, is going to create some headwinds for on a longer term perspective. Slower growth, the hiring is expected to come down gradually, and that is also weighing, which will weigh on the economic sentiments, and that is expected to support the gold in the longer term, where gold is expected to outperform commodities like copper, as can be seen on the chart. Because of the negative treasury yield differentials also, gold and copper ratio is expected to rise further. Now lastly, where we are expecting some recessionary scenario towards the start of the next year, gold has, in last 7 recessionary scenarios, gold has always given positive returns. So as can be seen on the chart also, except 1980, gold has given almost positive returns in all the recessionary scenarios since 1960 as compared to equities. So this is a very favorable scenario for gold on a longer term perspective, where we can still expect some new all-time highs for next year also. So that is what our view is there on the gold. So thank you very much, and we will keep you posted for more updates on commodities and currencies. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.